Okay, welcome to our venture capital panel. How's everyone feeling today? Excited by the conference, lots of good discussion.
I ran
My name is Mariana Danilovic. I'm the managing director of Hollywood Portfolio, which is an accelerator high of digital media companies, not just in AR, VR, but AI and all other areas of digital media. And I've been doing this kind of work since the Sony Pictures days when I was a member of a venture capital fund there, evaluating deals in media entertainment, and then running a KPMG incubator all in digital media. This is probably the most interesting time for funding digital media companies that I remember, through all these different iterations of my career. And I'm excited that you guys are here this morning with us to join us in this discussion, which has become global. We're going to talk all the way from the seed stage investments to Series A to M&A transactions, and we have people who represent all these areas of investment. So with that, I'm going to start with Maiwa, who is our Chief Technology Officer and Chief Information Officer of Next Digital, and she was with Univision before, and she has a global company out of Hong Kong that's in digital media, news, and broadcasting space, and their point of view.
Sure. Can you hear me, or do I need to?
You're good.
Good? Okay, good. Yeah, I actually have always been in broadcast media. I started my career at NBC for quite many years, and then switched to ABC, and then worked at Univision. And I don't know how I got there. I stayed there for 17 years before I move on.
Clearly, it's the Latino background.
Yes, yeah. People keep asking me, how does this Chinese women used to be in this Latino company for so long? I think there's some reason about it, because the whole Latino culture actually is very, very similar to the Chinese culture, value education with passion, and also I see through the very strong age of IT background through digital, and so there's always new things, and then the convergence of broadcast media into digital media. I think before I left the company, I actually went through the big project on the digital supply chain transformation, so that we can really get the broadcast media very quickly digitized and syndicate through all these digital platforms. And 2014, I decided to go back to Hong Kong to be closer with my parents, and also I saw an opportunity that in Asia, their digital, especially marketing and analytics, are really quite behind, probably outside. Actually, even for China at the time was not so but then they grow very, very fast. But outside of China, a big part of it is still very behind. So it kind of like left a good void for me to pursue. So that's how I moved to Hong Kong. And digital media was the company I went to, and but the chairman was so pissed at his staff not able to adopt digital transformation, so he changed the company to Next Digital. So the company was changed to become Next Digital Limit a year or so ago.
That's exciting.
And it was actually a print company, but it was very, very quickly become the number one newspaper and magazines company. But we have our challenge, yes.
Wow, it's like a $30+ billion company, right, in revenue? Or?
Yeah.
So it's quite exciting. So Rob Vickery is one of my favorite VCs here in Los Angeles, and he can tell you a little bit about his investment strategy now. Yeah.
So I'm Rob Vickery. I'm the co-founder and partner of Sage Venture Partners. We're on our second fund now. We are investing out of a $20 million fund. We're mostly focused upon machine learning, computer vision, enterprise software, and SaaS. With our first fund, we did actually kind of kick off and look at digital media and gaming and other kind of platforms in a deeper way. We started our foray and kind of our venture into VR in January of last year when we received 2 VR deals and Since then, we decided to really dive into this space and try and work out if this was something that we can invest in. So we've seen about 160 VR deals since the beginning of last year. Regrettably, we've invested in not really any of them. But there's a reason for that, and I'm going to talk about that today. But I'm still very interested in the space. I'm a very proud member of BAFTA Games, so I'm an extremely avid video gamer, and I'm a consumer of VR content. Unfortunately, I'm just not quite an investor just yet, but never say never.
Thank you. And then Ryan Wang came from Silicon Valley, San Francisco area, and he's now my new favorite VC, because I asked him what his investment strategy was, and he said content first, and then platforms, and then enabling technologies and enterprise. So you won my heart, Ryan.
Yeah, absolutely. Thank you for the introduction, by the way. So I'm the founding partner of Untitled Capital, which is a San Francisco-based early-stage VC, and we bet very heavily on the VR/AR sector. 6 out of our 7 portfolio companies are actually VR/AR companies, and just like Marina just mentioned, we invest in hardware, software, content platform, enabling technologies, enterprise services, enter this VR/AR space. And some of my portfolio company include the Wave VR, which is building a VR social platform for music lovers, combine music with virtual reality. We have a company called Visby, which is developing the next generation of light field technology. So basically building the next hologram cameras. And we also have companies like Humans, which is doing volumetric video capturing. And volumetric video is different from 360 video in that for 360 video, we just talked about it before our panel, in that 360 video does not have a 6-degree of freedom, so it doesn't provide you a very immersive experience. But if you can somehow enabling 6 degrees of freedom in a 360 video, that's what we can truly call as a VR video instead of 360 video. So basically, volumetric video is a 360 video, but integrated with 6 degrees of freedom as well. So so there are a lot of so I look into VR/AR space a lot, and I started writing my first check in this space in 2014, which is very early days, and back then VR was not a investment sector at that time. So it's amazing to see how fast this industry has been evolving, and also I guess one of the things that make my fund different from the other fund is that I'm a believer in the Asian market, especially the China market, in terms of I think for VR/AR, most of the technologies are coming from the U.S., and the U.S. is definitely the leader in the new technology and innovation. But in terms of consumer adoption, who are actually using VR, who are actually spending time in virtual reality, I think we can see a huge, much faster adoption in Asia versus the U.S. That's why, one of the fundamental in our investment thesis is that most of our investments are here in the U.S., but we help our portfolio companies to find their product market fit in Asian market as well. So.
Well, it's too bad you're not enthusiastic about this space. And you're sitting right next to Rob, so this can be a good discussion. That's why we placed you strategically.
Let's do it.
Alexis McLean is actually an analyst that tracks AR/VR space, so she's going to just introduce herself and then start off our discussion later with some framing of the market. So, Alexis.
Hi, I'm Alexis. Oh, there we go. It's working? Okay. I'm Alexis Macklin. I'm an analyst with Greenlight Insights, and we're a San Francisco-based VR/AR market research firm, specifically specializing in syndicated data within the field. So we're looking at market forecasts, consumer research through US-based surveying, and also some industry surveying as well. So we're asking developers, different companies, what they're looking for as they expand into VR and AR. Something that we're very proud to talk about is just how global this industry is going. across different industries as well. So we're super excited. I think we're one of the biggest components for the enterprise sector within VR. We forecast it to be about 24.2% of total global revenues by 2021. So we're really excited about that from both a hardware and content standpoint. But we're pretty, I don't want to say we're super enthusiastic. We're definitely not pessimistic. I feel like we're the realistic perspective. So we're looking at what the numbers tell us. So I'm interested to see both points of views on the panel.
Cool. And then Francis Yip has been with some of the largest technology and telco companies in managing their Asian divisions, and I think most recently with Verizon, and has been on the team that did quite a few M&A deals with the company, so he can definitely address that area.
Well, thank you for the intro. Good morning, everyone, and welcome to it. And thank you for having me on the panel. As Mariana did the intro, I spent the last 30 years in the corporate world, working for global IT company, managing their operation in Asia Pacific. My last role was the Senior Vice President for Verizon in Asia Pacific. We have 11,000 people on the ground, and I manage a budget of around $2 billion. So I've left all that, but during my 30 years with the corporate, right, I spent a significant amount of my time looking at M&A in an investment, and those activities include assessing candidate companies, as well as the due diligence if it goes to the next stage, as well as post-transaction, which includes putting together the integration team, the management team, and integrating part of the company or the businesses or the product into the main core company. So I've left all that. I am still on the board of a board member on 3 public listed company and doing pretty much the same thing, but lesser pay. But then the other nice twist to it, I'm also an angel investor. So I do invest in certain companies, and my current company is called Varan Idea. It has a really cool app called Kalen, and this app is AI driven, and it looks after a managed and organized lifestyle. So I'm delighted to be here, delighted to share my experience M&A investment from a corporate perspective. Thank you very much.
As well as seed investments now. Okay. So, Sonata Taman is an advisor in the digital media space. She's with Luminaire Advisors.
Thank you, Mariana. My name is Sonata Taman. I am a process engineer, international business strategist, and CEO and founder of Luminaire Advisors. We are a growth strategy consultancy focused on implementing Fortune 500 strategies for small to mid-sized businesses, propelling their growth and scaling. I myself come out of the Fortune 10, including the Fortune 1 company in the world. I've worked for both ExxonMobil and Procter & Gamble. So I help extract those strategies that are usually kept at the top and implement those for small to mid-sized businesses in the VR, technology, tech, and SaaS space. And I am also Chief Strategy Officer of Virtuality, a leading VR studio. Some of you might have heard of us. We just launched our newest platform, Mirage, which is the first of its kind multi-user, multi-experience platform aimed towards enterprise and brands, cutting VR project costs by almost 75%, both cost and time.
Cool. So now we're going to talk about the market that we're going to address. Alexis, take it away.
Sure. So when we look at VR as a market, we're forecasting the market to reach about $7.2 billion by the end of the year, and in 5 years, about $75 billion. So when we look specifically at venture funding, we saw a record-breaking year for VR and AR funding with $1.8 billion between different companies. So we saw an average about $1 million per deal, with 72 companies reaching over $2 million. So we see different sectors as growing and emerging, including location-based live events and, of course, games are always growing. So within different deals within the space as well.
So Rob has a point here.
How
I
much of
think.
that is reliant upon Magic Leap?
Actually, we took out, so something I should mention is we took out Magic Leap and Unity, since, you know, those are such big outliers. Yeah. So that doesn't really show a good perspective for the entire industry. So we actually took those out when we were looking at the total.
But Mind Maze was the largest deal, right? And
Yeah.
that's another one of the unicorns at the beginning of it. Yeah.
So both Mind Maze and Rubo generated about $100 million last year in venture funding each. And Rubo is the headset manufacturer of Ideal Lens, the standalone HMD in China. And then Mind Maze is based in Switzerland. That focuses on a machine interface for VR.
So out of those, investment strategies for this marketplace, Ryan, what do you think is really hottest right now? Like, not what you invested in already, but like, what would you look at today?
I think I'm particularly interested in companies that is able to drive the adoption of virtual reality and augmented reality. So we all know that right now the VR AR market is extremely small at this point. The installation base is very limited, and the amount of time that people actually spend inside VR and AR is even smaller than a expected number. So I think, the interesting thing about the industry is that we all know it's very valuable. We all know that at the end of the day it's going to happen, but the path to that day is still not clear. And I think that is the biggest problem we need to resolve today, right? So it's not like when we are looking at the numbers today, how can we build a business on top of these numbers? But more it's like, okay, so here are the numbers today, and here are the numbers we are expecting tomorrow, right? And if we just build a business based on today's number, it's gonna be a small business at the end of the day, right? So where's the imagination part? So I think I'm particularly interested in any entrepreneurs who's building a product or service that is able to drive the adoption of virtual reality and augmented reality, and to somehow convert people from non-VR users into VR users in the process, or to enable people to actually spend more time inside virtual reality or augmented reality every day, right? Because right now we have roughly around 1 million high-end VR headsets, but how many of them are actually spending 2 hours or 3 hours in them every day? I guess the number is super low. So I think we are at a stage where we have a okay installation base, but we don't have any true VR or AR users at this point. So anything that drives the adoption, I'm particularly
So Maiwa,
interested.
you shared with me some ways that you're looking to invest in the market or get into the market from the corporate investment side. You want to address that?
The company's chairman, Jimmy Lai, he's actually quite very visionary. Before anyone in Hong Kong or Taiwan thought about video, he already pushed the company to go for using video to tell the story. And then later on, back in 2005-06, he felt that video is not good enough. We need to tell the story even when there's no video. So he formed the company Animation. So then they start using animation to tell the news story. And a couple of years ago, he said, that's not enough. VR is the future. so he was really trying to motivate and mobilize the news staff to use VR to create news content, which is very difficult, right? Because you have a bunch of these. We actually have about 1,500 reporter in editorial between Hong Kong and Taiwan. So they try to really follow his direction, and we've been producing, and especially in Taiwan, who's very rigid and listen to the order. So they're producing at least one 360 video, the lower end of the VR. We also actually launched a VR app. The Hong Kong folks, they are more, they're slower. They do like one video a week, but usually they're much better quality because they try to think about what is a story that is really good, relevant to use the VR environment versus just by quantity. But I think by quantity is okay just so that they can practice. And we did bring people's awareness of it. In Taiwan, actually, with our magazine, we gave out the Google Cardboard, and we have a 6% lift of the VR apps download. And in Hong Kong, we gave out 120,000 also the goggle, and also get 6 or 7% lift of the download, which is which is pretty good, yeah. So actually 6 to 7%, not the lift, of the people that we gave out the paper. I think our challenge is really that the equipment and the knowledge and the training is still not there from the production side. We are trying to do our best to educate the markets, the consumer, so they get to be aware of they can really view content in VR 360. But I think it's going to take a little bit of time for the market to be mature, both on content production as well as content consumption, right? Both on the platform and the equipment side of it. But we want to make sure that we are the early adopter. So when the time comes, then it's there. We also created, because news is also very hard, right, to really get, you spend so much time to produce the content, it's going to go away, so become irrelevant. So we're also trying to invest more of the evergreen content. We have a magazine that's really very popular, prestige on travel and food. So we are relaunching the app, and we're going to look for create more content, which I think is very relevant. When you think about which venue to have your wedding or to have, whatever celebration, then it's much easier to go to VR and try to check out the location, multiple locations before you decide. With Taiwan, we did really well in real estate. So we have the 360 video for people to really look around the new development, because Chinese people like to buy properties. So actually those that did very well. So I think it's a matter of finding the right content and creating the right experience for our users.
Would you do all the content in-house, or are you putting together a fund to fund
We
creators?
actually do most of the content in-house.
Okay.
Some of the content we do source outside. Yeah.
Okay, that's good to know, because a lot of people here are in the business of creating content in this room.
Yeah, actually we do like to kind of like, get connected with more people who can do really good content, have some concept and idea what
Yeah.
would be a good, relevant
For
content.
your
Yeah.
application for news.
Right, exactly.
So Rob's looked at a few of them, like 170 plus in the last year. What were some lessons learned from looking at all of, because here you are in Los Angeles, right? With a fund that's interesting in digital media for quite some time and global in its view. What are you seeing as deals? I mean, this should be like the deals, right?
Yeah, I mean, it's weird because beginning of last year, I felt that VC was the right form of capital for VR entrepreneurs, and I think in some ways it is. This year, I mean, I think the dollars have decreased by 80% from venture capital into VR startups in Q1 of 2017, and I wonder whether VC is the right source of funding for a lot of VR startups. And there's a few reasons for that. Most seed stage companies and companies going into the A round, and maybe even a B, if they have a corporate VC or a corporate capital into their business, that's generally quite a turn off for us, because it creates platform risk, and it creates a bunch of issues that if you receive capital from HTC, then you're going to be building that for the Vive, and Oculus might not get a look in. So that creates risk that we don't want. So we started to see deals that are getting capital from non-VC sources. So I actually think corporate venture funds for content creators is not a bad idea, actually, for you guys. I think we're also seeing that some VCs like you guys, it's great that you're making a sector bet. It's really important that you're doing that. And you have to remember that venture capital is a 10-year asset class. We don't expect to see returns for at least 7 to 10 years. So if, based upon the numbers that you're talking about, then that's going to be really great. So maybe I'm making a mistake when I'm investing in something right now.
You're going to rethink your strategy after this panel.
Maybe. When we've invested in an augmented reality company called Ventana, that was our first ever investment, and that was 2 years ago. That's a company that actually generates revenue quickly. And I'd encourage you to think about that with your businesses. If you can try and self-fund yourself without having to go out and raise extra rounds of capital, because the last thing you want is a down round.
I actually want to concur on that point because that's exactly what we did with virtuality. We've been in business for 2 years, post-revenue, building our basically our adoption rate out there. And now that we are looking at global expansion, it's the first time that we're opening discussions on possible funding because we never needed it before. We were post-revenue from the get-go.
Yeah.
So now we're possibly expanding to Australia. We're in talks with major sports leagues there. And this is the first time we're thinking about that because of the expansion. But otherwise, I concur with your point. If you can get yourself to post-revenue and start small and grow gradually, that's a much stronger position to be in.
But to be fair, revenue is tough. You've got 1 million users with PC-based headsets, and you've got, 5 million mobile VR headsets, but no one really knows how much they are being used, right? So generating revenue is going to be difficult. I think location-based VR is I'm very curious about that. The unit-level economics of location-based VR and investing in arcades is difficult for a VC fund because the actual cost of running those things is high. If any of you have been to the IMAX VR arcade, I mean, it's kind of cool, but it's also really, really hilarious. I was there doing the Walk VR experience, and one of my other friends was doing it, and I was filming her, and this guy with a big piece of cards was doing this to simulate wind. It was one of the funniest videos I've put on Instagram. It's I just think, think about how you can keep your business really lean. I think another thing that we like from deals that we're seeing are companies that are preserving optionality. So optionality for whatever's going to come out at the end of this year from Apple. I'm very curious about that. Just keep yourself lean and keep your options open to move into different areas.
And yet M&A is happening. So there's very little installed base, and there's very little revenue. So, Alexis, what are the M&A numbers? So it's kind of interesting.
Yeah, so I think the biggest one that we saw last year was Snapchat acquired Simagine, which is an Israel-based AR company. But most of the deals went undisclosed. So we saw Google acquiring iFluence, Intel acquiring Vogue, Entertainment One acquiring Secret Location, which is a content studio. But these are numbers that aren't being disclosed right now. But we're seeing a lot of activity in M&A. I think, back to what you were talking about, your point about what we were talking about developing content fast. With the Riot acquisition by Huffington Post, AOL, Verizon, all that. Something that Brendan Rooser talked about a lot is that why he was so successful was he found a revenue path through marketing. So he was creating sponsored content to kind of help fund his passion of doing VR documentaries. But what made it so great was he was doing it quickly. He was able to get it out the door. He was able to do it quicker than anyone else, which led to that successful acquisition. And now he can focus pretty full-time on documentaries, so that's pretty great. I mean, he has his own channel in the Hulu VR for that as well. So, when we look at the more successful content companies, we're seeing them have kind of like that two-tier strategy, like one is their passion, what they really want to go after, and the other one is realistically what they have to do now. So
that's a very good point for this group. Francis, you want to talk about that acquisition? Since you're here, she made an opening.
I guess I omitted to mention in the beginning, right? I was involved in the AOL acquisition. That's one of the bigger one, and the one before that was when NTT, the Japanese telco, acquired Dimension Data in 2010. And of course, there are smaller ones as well. So I want to impress on you, right? Acquisition by corporate doesn't mean that it has to be mega deals, right? I know that I came across many people in this forum in this couple of days, right? There are mid-sized, there are startup, and so forth. Corporation will actually look at these opportunities as well. But I really want to impress upon the audience here, right, is the content part, right? You could have the coolest headgear, the coolest goggle, right? But all that would have a very limited loyalty or stickiness with the corporate. Why? Because you can have the coolest headgear and tomorrow somebody will invent something cooler than that, right? What corporations are looking for is the content. Yeah. Why? Because the content is the one that will drive customer or user experience. And that's very key. And I'm glad that Mariana, that you mentioned that a lot of you are content provider or content creators, right? That's very, very key. All the big corporations today, they're not going out there to buy the coolest gear, I can tell you that. The reason why Verizon bought AOL is an open secret now, right? It's because of the content. It was a telco, it had lots of bandwidth, it had a lot of hardware and all services, but the content. Why did AT&T, is going to going to close Time Warner? Not because of all that cameras and all that gadget and things like that. It's the content, right? So the content actually creates stickiness. Stickiness creates the user experience. User experience and stickiness creates loyalty and the repeat business and the new revenue stream. So I think that is very, very key for this audience. The content is so critical.
Okay, so now how to fund that? Come to the 12:15 panel on crowdfunding, because content actually is being funded and it's successful in crowdfunding platforms, not the incentive-based, the equity-based, the ones where people write $1,000 check to invest in your company. And then once you start a company that Ryan and Myra and all the people who are decision makers and Rob in this field actually gets traction from users with creative application that you have that's going to create some sort of adoption of the VR and AR markets, we're probably going to see many more marketplaces, and we're going to see many more companies being funded. So I'm going to open it up to you guys, because you've been a very loyal audience for many years. What would you like to hear from this panel? They kind of cover the whole spectrum on investments. Go ahead.
Sure. I want to know what is the range of investment that you do today in an AR or VR-based software company for hitting that they are hitting the seed funding and A series around.
Do you mean the check size? Are you referring to the check size, the amount of capital written? Okay,
Good question.
Let's just dive straight in. Yeah. Well, it depends. I mean, seed round for us, we should both take this one.
Yeah.
Seed round for us is somewhere in the region of 250 to 350, and then we reserve the same capital or maybe a little bit more for the Series A. So we're life cycle investors, so we keep capital back. So that typically between the seed and Series A, we would invest somewhere around 800 to 900 grand into the startup. And then we have an opportunity fund, which we're raising, which is much like you guys are always raising capital, that continues to invest later down the line.
And do you go with other people sometimes so the rounds are larger? Yeah.
Well, we march to the dance of our own music. We don't rely upon other investors, but we do have people who like to co-invest alongside us from Silicon Valley and stuff like that.
Good. Ryan?
Yeah, very similar to Rob. So our check size is ranging between 100K to 500K. And if in any case we decide to be the lead investor in that deal, sometime our check size can go up to $1 million. But that's about the range.
And then Francis, Amaran Ideas has anything from, $1 million to $1.5 million, depending on different sources of money that you're looking at?
Well, I mean, if you look at Yahoo, right, which we are in the process of, Verizon is in the process of acquiring, right? It came from $5 billion, it's down to, slightly under $4 billion, right? If more breaches out there, right, the price will just keep coming down, So you can have the mega deals, but, we, corporate also are keen to look at smaller companies, and we have done smaller companies in China in IoT and telematics content, for example. A company in New Zealand was about 200,000 to 500,000. So Really, it's not so much as the size of the check, right? At the end of the day, it's really based on what synergy that company and that product brings to the core company. That's number one. Second thing is the retention and new revenue growth or new revenue stream. That's important for corporations. So again, is you could have mega deals, but then you could have companies that we pay for in the range of less than 500,000.
And then Varan Ideas, the incubator you were talking about, that's all sizes of investments, maybe up to $1.5 million. That was you.
Oh, yeah.
Yeah.
Sorry.
You were like looking at her now. So, and then what are some of the investments that you guys do?
There are a lot of time, Jimmy Lai invests out of his private money, and so that could really be pretty big, like the next animation studio that he started, and he continued to invest, or the game division that which the game company is actually his own. I can't really set a specific because it really varies, that in size depends on the potential of that company. Yeah.
It's fascinating. Go ahead, Rob.
There is there's a new program from Textiles that is being created here in LA, which is the Textiles VR and AR Fund, and my friend runs that, and really impressed actually. I've been with them for the last couple of months, thinking about and helping them shape their vision on what they want to invest in. So those incubators typically write somewhere between 100 to 150, and then they would expect somewhere between 6 to 8% of your company in exchange for doing that. But I'd encourage you to read about that if that's what you're looking for. And they're investing in content as well.
Yes.
I'm working with a group of current and retired athletes that are looking to fund tank ventures, particularly in the AR/VR space. Question, what is the process or checklist of 1 to 3 or 5 items that you look at when you want to make a deal? When you're talking to someone, you've seen the summary, you've seen the demo, they're in the market, but what is the process that you guys employ when you make the decision about these things need to be checked out before we go into due diligence or stuff like that?
Is that for me?
Anyway.
I guess I'll take it first. So just like any other, early stage investors would definitely look into the team, look into the product, look into the addressable market, and we get a feel of, what's a whole package look like. And I think, what's different for us is that just like what I mentioned earlier, so we evaluate whether this specific product or service is able to drive the adoption of virtual reality or augmented reality. And also, in addition to that, we look into the synergies between the resource and the background from our side versus what the team does, right? So if we can see a very strong synergy, and we know exactly how we can be helpful to this company after we make the investment, how we can help them to expand the scope, how we can help them to develop business, to for example, make some of our LPs into their clients, or introduce some new clients, stuff like that. I think that is very helpful for us to make the decision as well.
And if I could, sorry, Rob.
No, go ahead.
Thanks, Rob. So if I could add my perspective to that, right? From a company perspective, from a corporate perspective, right, in addition to what Ryan mentioned, there are very important factors. I would just add that corporation will look at your management team, right? What kind of management team, what kind of quality? Because at the end of the day, a corporation may not want to replace the management. They want to have continuity. They want to make sure that that is not a one-off kind of thing. So the continuity is very important. I think the second part is the culture, right? These are all nice motherhood words that we throw there, but the culture is so important, right? If you're going to have a culture that's vastly different from what the company does, right, that's going to be a deal breaker, right? And these are you can't really put them on a scorecard. It's that gut feeling, that culture that we sit down with you and say, well, that looks like a good team. That's something that I would add in there. And obviously for corporation, right, we look at monetization of your product and your services. When we talk about monetization, right, how do you monetize that business and how quickly do you monetize the business? So I think these are the three I would add to what Ryan has mentioned.
I think I would have to agree with that because I come out of the Fortune 500 myself. And having that experience and sitting on the board have helped us immensely. Like we've talking to a lot of corporations and they really appreciate that acumen that you bring when you have that kind of experience, you speak the same language. And not just that, like representing a VR company, to answer your question from a VR company's perspective, where we were all of a sudden being approached by investors that want to invest in us. We weren't seeking investment, but after our launch in VRLA, we saw that trend happening, and that was because we were so different from everybody there. There was a lot of content, 360 plays, which is great. There was a lot of hardware, usually reserved at the bigger companies, and there was also gaming. However, we were the only platform there. We were the only platform that's multiplayer, multi-experience. People were like lining up around all four corners of our booth just to demo that. They've been setting up appointments since then. We're still taking appointments for demoing. It's been quite a ride. But basically, investors are coming to us and like, we want to be part of this because you're so different. You have a chance to make it, like by the time people copy what you're doing, you're so far ahead of everybody else.
So back to the investment question, I have some information for you. So when I started my first incubator, we had a study that showed that if you invest in a company and you call all the suppliers and all the customers and all the other co-investors and people who know them and do the sort of the review you would do on a human being when you're hiring them for a job, that due diligence kind of review, that still in Silicon Valley, it was, and this is when there were only like a couple hundred VCs and not, millions like today, that in Silicon Valley, you still had a chance out of 1 out of 10 of success. But if you rolled up your sleeves and worked with a company about 3 to 6 months, got to know the team, tried to help them out as these guys described. So this is the new kind of venture capital model, accelerator. That's why there's so many incubators, accelerators. Your prediction level went to 7 out of 10. So that's a big component we didn't address, that you have to literally kind of glue the whole thing together with a team. And you will see very quickly, having done this for many, many years now, that some deals just fall apart and you can see it in the first 3 months why that's happening. And other deals are going to be like a rocket ship and you will see it early on as well. So you have another, go ahead.
I also want to add one thing. Throughout my career, I actually worked with many startup company. And because we are a corporation with a resource and we do need platforms, so many times a right product idea and the right people will be we'll be interested in working with. So a lot of time people or startup, they have the right kind of the right technology. They might not really have the right use case or a good product. So when you work, so I think ideally, if you can find a corporation that really can guide you through the product development and make your product mature, they can also fund your operation, right? And so then you can end up in a couple of years become a really mature, well thought product that you can get really good funding for or sell the company. Because I know many years ago, say for example, ABC, work with Uplink for their video platform. And Univision and ABC got picked up by Verizon. The Uplink got picked up by Verizon, right? And Univision worked with Envato. Envato last year got picked up by Google. But it's really, they wouldn't be able to really produce anything of substance if it's all up to the engineer. But only when you really work with company who really can use your product and can guide you through, navigate how to really best work develop your product for maturity and I think that is really important.
Well, of course, if you can work with a business unit of a larger corporation that can really use this strategically, that's probably one of the best ways to raise money.
As long as it doesn't
Yeah.
create platform risk,
Yeah.
which it can do.
Can do.
I think some of the other things that we look for is we look for a sensible term sheet. We look for, some of the most egregious terms we've seen have actually come from VR deals. So, we've seen terms which cap our upside that gives the founder the right to sell before the Series A, and we only receive 2x our capital, which, is just not why we do this. So we look at the term sheet really closely. We're looking at the credibility of the founder, the uniqueness of that founder, why he is the person of 10 people in the world that can actually build this thing. We're looking for a minimum viable product, something which might work. It doesn't have to be perfect, but something which is showing that this is what it does. Some traction of clients, some traction of maybe some revenue if you have that. If you're a VR company or you're a content company or you're more focused on consumer, then we're really interested in two things: the velocity of content creation, so how much content is being created on your platform and how often, and then the consumption of that content, which is with 360 video, some of these early platforms are only getting 24 minutes of use per user per month. That is not a monetizable market. So we want to see serious adoption.
Could I follow up? Based out of the Bay Area, work on a Chinese accelerator, so we look at cross-border strategy because sports and sports players have a global presence and can be influenced outside of the tech play. I'd love to follow up after this.
Yeah, well, we have athletes as LPs, and they're very helpful actually for VR companies. I think if you've got a following and you've got an access to market, they're actually very good LPs.
I agree. We're working with Australian athletes, and Australia is still very virgin territory in VR. And so, I come out of the sports world myself. I used to play basketball in college, but so I find it very interesting how it's a great way to get into VR through sports, because people are going to want to consume this content. They want to be able to have this experience with their favorite player and so forth. So it's a great place to be.
Take another question. There you are. Hi.
What are the biggest failures or mistakes you see when people are trying to raise capital, and how can entrepreneurs accelerate the process of actually closing and getting a check?
Not raising enough money, or raising too much.
Yeah.
One or the
Inflated
other.
valuations.
If you're raising money for 6 months runway, I mean that means you're going to have 3 months to actually spend the capital, and then you're going to spend the other 3 months out raising money, which I don't want you doing. You need to raise enough money for 18 months of runway. Again, the term sheet issues, keep the cap real. There's lots and lots of great safe documents that you can get from YC online. No offense to the lawyers in the room who write these things, but you can get those. Keep the valuations reasonable, and choose the right investors. So the other investors you're getting money from, make sure they're engaged. Make sure they're not just dumb money and just sit back and just let nothing else happen. Get your best investors that you can find.
If I could just add to the point on the term sheet, right? As a CPA myself, right, I'll be really suspicious if day one you become profitable. But don't get me wrong, don't get me wrong, right? But if you are, bless your soul and thank you and congratulations, right? But if you come to us and say from day one you're profitable and it's going to be like 500% above what and stuff like that, right? We get really suspicious.
Are people really cooking the numbers? Yeah. Really? In VR?
It's true though. People always talk about a 5-year revenue plan. You're like, you don't know what 5 years is going to be like. Again, it's like it's the first slide. We just go like, yeah, whatever. This is all BS. And just tell me how you're going to spend the money in 12 months and the milestones that you will achieve with that capital. Yeah. That's the most important thing when it comes to finance.
So these guys, you have a documentary platform, right? Because coming out, they're in business school right now, right? Putting together their plan. So in terms of launching that platform, you want to aggregate content. You want to also figure out how to distribute content effectively. Someone like Maiva would have a good ideas as to documentary content, right? They did Amanda Knoxville. I don't know if you're familiar with that. It's on Netflix right now. Yeah, so really interesting stories that are kind of engaging. News companies, your strategics, you need to study them. You need to figure out what consumers would want to consume from the content that you guys are doing, et cetera. So it really is not just, I would say, the 1, 2, 3 of venture capital, but also understanding your business, your ecosystem, and where can you raise money holistically from the sponsors, investors, funds that are corporate, et cetera. So being creative as a creative, which you guys are. Any other points for them? No. One more? Hey, Lisa, how are you? Go ahead. Behind Lisa. You get another question, my friend, because you ask good questions.
Yes, but I wasn't sure you said Lisa, so I was just waiting for my turn. So, so a lot of the startup companies, they get to a prototype and the idea and everything that you mentioned that it's good, but they need that capital to get people to come and develop a really for live production, especially if it's a SaaS solution, etc. Is that considered a seed fund for you, or is it considered an A run? And usually you can't just go by 250 and for like 18 months, as you mentioned. If you want to plan for 18 months, how do you envision the software companies who are starting and they have maybe 1 or 2 or 3 engineers working on it, but they needed to take it to the next level and really go big? How do you fund that, or how do you categorize it? Is it a seed run for you, or is it an A series for you?
That sounds like a family and friends round at the beginning.
Yeah.
That sounds like you're raising money from people who are closer to you. The seed round is what you're talking about, which is where your rate. So the F&F is typically like 200 to 400 grand, something like that, and then the Series Seed is typically somewhere from 750 to 1.5 to 2 million, and then you use that money to be able to prove out your minimum viable product, and then you go and raise your Series A.
Yeah, I think these days, especially in Silicon Valley, for this Sand Hill Road VCs, the definition of rounds tend to shift towards a later perspective, right? So, let's say a seed stage deal today may seem to be a Series A deal 5 years ago, all right? So I would definitely agree with Rob in that, from the description that you just described, it sounds like a pre-seed round to me. And normally, on seed round, you should have either the entrepreneurs themselves or their friends, family putting some angel money first. And on the product side, it should not be just a demo. It should not be just an MVP, but you can get a taste of what is unique from the product at that point already. So I would say that's more like the definition of seed round at this point.
So Ryan, you said earlier when we discussed Series A rounds, which are the next round after that, give me the size that you think of Series A, anywhere between 2, 3 to 10 million.
Yeah, I think for a Series A, in terms of money that the Series A entrepreneurs try to raise, is somewhere between, I would say, between 1.5 to 6 million.
Okay.
And in terms of valuation, most likely it's somewhere between 15 to all the way to 50, actually.
But you get to see a lot of deals now because Series A market is somewhat dead. And so explain what's going on with the Series A's right now.
I think especially in the VR AR space, right? There are so many startups in this space, and at the same time, there are many startups in this space that's trying to solve similar problems. Their products are very similar to each other, and also kind of echo back to Rob's point that a lot of them are not able to raise enough money at first. So a lot of them actually not able to live through the point that they are ready to reach Series A. So in terms of Series A deals in the VR AR space, I would say there are not too many interesting companies that's raising Series A right now. And also in the VR AR space, I think there are less Series A investors compared to the number of seed investors around. Deal flow is one of the reasons in that there are not too many Series A deals. And I think the most important reason is that VR AR as an industry is still early, and most of the companies are still at early stage. And also, VR AR as an industry haven't reached to the tipping point where it's ready to grow exponentially, right? And all the Sand Hill Road VCs who are focused on Series A, Series B investment, they are waiting for the industry to reach to the tipping point where it's gonna go exponential to get into to get into these deals. So that's why I think right now it's definitely a little bit challenging for any VR AR startups to reach Series A at this point.
Which is the next stage. Go ahead, Michael.
So James asked the question about factors you guys consider. One word I was expecting to hear that it didn't was scalability. Is that something that...
Coming from Magic Leap. Yes.
I mean, it'd be nice. Yeah, it would be nice, but it's difficult to scale with such a slim number of headsets out there, right? So scaling into this as a device, there's 4 billion of these in the marketplace. That's interesting. But scaling into expensive, unhygienic, hot, ugly headsets is a difficult one. Yeah.
Yeah, and I feel it's actually a same question as I answered, in that it's kind of meaningless to talk about a scale in VR AR at this point because the total installation base is very limited. So if we know that there are only 1 million high-end VR headsets out there, so if you take 20% of the market at this point, and you scale that into 80%. Still, it's a small market, right? So instead of scale, I think what's more important is conversion. How can you convert people from non-VR users into VR users? Then it's a different type of scale. So then, if you can convert, then you have 20% of installation base based on 1 million users today, but you can have 20% based on, let's say, 100 million tomorrow. Then that's a much better number than versus 20% on a million today and then 80% on a million tomorrow. Right?
Great point.
Point about driving adoption.
Yeah.
And also, if I might add, I think enterprise is very scalable right now, like compared to at-home or location-based distribution. Enterprise is very hungry for VR, and whether it's in training, which saves a lot of costs for Fortune companies, or whether it's in PR. I've seen quite a few uses of VR. PR in VR for Fortune 500 companies. So enterprise is where scaling is happening right now until the adoption happens on a person-per-person basis.
Phil, that last question.
Right. Ryan, you mentioned Sand Hill Road's waiting for the indication of the tipping point. Do you have a sense of what that tipping point will be, or is it just you'll know it when you see it?
It's hard to give a specific date on when this tipping point will happen, but I think in terms of the mass consumer adoption of VR, most likely it's going to happen with mobile VR. But right now, the mobile VR, one of the biggest problem is you are not able to deliver a AAA level type of experience on mobile VR headset, right? So, and the question can be translated into how can you run a desktop VR level type of experience, a high-end VR experience on a mobile VR headset. And I think only when these technical problems can be solved can we approach the date that the mass consumer adoption is going to happen. So given that, I would say somewhere between 2 to 4 years at this point, because 2 years is the shortest time when, on the mobile VR side, when we have inside-out position tracking, we have good controlling devices, we have better field of view, better computing power, better GPU, CPU, better network infrastructure to support a decent experience on a mobile VR headset, and that's something that's required before the VR is being adopted by the mass.
So we have 1 minute left. I'm sorry, I know we have millions of questions. We'll be available right after. I just want everyone to...
Here, if I could add on
Yes.
to that,
Okay.
something that we see on the consumer end of it, on our consumer surveying, is that consumers are largely unaware of more higher end headsets. We see a vast majority of awareness be around the Samsung Gear VR, around mobile headsets. And even when we're looking at the AR space, one of the main adopters right now is enterprise use cases, or even on a consumer level, all of those end up being on mobile devices. They're looking at how to use Google Tango within the workforce, even different work, work training from different locations. It's all ending up being mobile based, and once we get that price lower and that ROI to where enterprises can justify the larger cost on VR headsets and AR headsets right now, that's when it seems like it will come together.
So just by one sentence, what do you want to impart on our audience as to what are some areas they should focus on in building their AR and VR companies? Harder to do in one sentence than in 10. I'm sorry, Maria.
From my area, I hope that the startup can think about how to make the VR content production easier. I think, to me, that's most important.
Rob?
Keep it lean. Keep and preserve optionality in your business model, and create lots and lots of content.
Ryan?
I think if I have to seek two keywords around VR, AR, I think number one is children.
One sentence, Ryan.
Right.
Oh, this is hard.
Number one is children, and number two is Asia, because children will be the true users that grew up with VR, AR as a default media. So they will be the true users for VR and AR. And as I mentioned earlier, the adoption is happening faster in Asia. So definitely, you need to have this kind of global vision.
Cool. Alex?
So I'll talk about social VR. So different content companies should consider different social platforms within their applications. That's something that we see through our consumer survey. We see a lot of consumers indicating more anticipated daily use from different applications that have social interaction. So I consider that.
Cool. Francis?
I would say that focus on the user experience and the content. And don't be intimidated by going to a corporation for funding. As what Sonata mentioned, right? The corporation are consuming VR big time, right? So that's your market, right? Go out there and hit it.
Sonata?
Differentiation, team, and execution. If you differentiate yourself enough, you have a great team, and you execute it right, you can't go wrong.
Well, I want to thank our panelists and you. Lovely questions. We'll see you at noon, 12:15 crowdfunding.